Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 8th, 2024. Hope you guys are having a fantastic day, and let's get started. So we saw the Bulls try to give us a rally today. It was up pretty nice today, 53 points, but it was up almost 100, and then we saw really the last hour there was selling. So it's kind of hinting to me that let me clear these off here. What it's kind of telling me is that this is not going to be the lows right here. If it was, we would have been buying coming in. We would have hit one of the moving averages. But the one thing that's kind of interesting is where we actually reversed. Now, remember, everything is a pattern. So here you have your A, B, and now C. And if we take a look at it, what it means... Oh, jeez, sorry about that. Okay, so what that means is you have your A, B, C, and this is the 100% move where it's exactly equal. So this is, and it seems like this is a lot of the, really the moves that we're seeing right now, where we can have it could look like an ABC here, and now we just did an ABC here. There's nothing that is impulsive, meaning I don't really see five waves. I just see a bunch of ABC moves. So it could form into something bigger, but right now, I think the Bulls have their the backs against the wall on this one, and there's just all the uncertainty that's out there with geopolitical, with the elections, with World War III, with everything going on. I'm surprised we didn't see something like this a lot earlier, but as I said, it was the yen carry trade that really triggered this whole thing, and there's a lot of money in that, and that was the free money that was coming in and really bidding up this market. So now that that's gone, they have to figure out a new way, because it was basically the government giving them money. They were borrowing money from the yen and then buy at a cheap rate, and then buying things that had high interest rates in the Americans. So in our stock market, obviously. But that it was basically free money for them, because they really didn't have any risk, and the risk was what happened when it blows up. So it goes on. The yen carry trade will pick up one more time again at some point. I don't know when, but in any case, when it blows up, it unwinds, and it's a very, very difficult situation for the Bulls, I should probably say the least. So unless the Fed starts probably lowering rates to follow what Japan was doing, then what's going to happen is you're going to see just money flooding out of this market now, because it's going to be finding someplace else to go. But let's just forget all that. I'm not going to get into it. It's complicated, and I'm not even an expert at it. So let's just say that the Bulls have the pressure is definitely on the Bulls. So if we're going to take a look at some, as I said, this is the ABC pattern. And if we're just looking at it, like I said, there's nothing really impulsive about this. So if we're going to look at it and say, okay, well, this is the top here because we did the 100% pattern match on it, and these lows get taken out, then we're looking. It's probably going to come down and at least test this is the spiders. Hang on one second. SPX. Okay. So what this? Come on, here we go. All right. So if these lows get taken out, then you can see we have the 200-day moving average that's right at 50.83, but that's just the moving average. The real support is coming in right around that 49, I say the 5,000 level, and then it's coming in at the 48.23. And if you take a look in the premium report that I put out today, there was nobody that was really prepared for this, and I showed that through the just what this put call ratio was doing, and how the VIX was pinned down, and typically what happens is when these things unwind and the market gets caught off guard, everything goes haywires, and that's pretty much what we're seeing. So I don't believe it's over. I'm looking at something. So I play for a move coming down here. I'm still looking to trade both ways. I'm at the straddle trade that I took did not work as planned, just because we did it with IWM, and that was taking its sweet time. as far as movement, and the time decay just crushed us overnight. But we ended up getting out with it, just a minor little hiccup, nothing major. But in any case, it happened on that. But like I said, I'm actually believing that we have there's still more room on the downside, and really a way to look at that. Oh, I thought I had it on there. Is, the weekly chart that we have is really just starting to roll over. So it's not even down at oversold levels. And if we actually just move it here, I'm going to go to a weekly chart, 3-year weekly. So here you can see, if we take a look at this, actually, it did get a little bit oversold. I was looking at it, it was right here. But we have the bearish divergences, but you can see that we have this is the 50-week moving average right at the 50.09 level. So there's going to be buyers in this area here, and it's just a matter of what is going to happen. Are we going to take this out and have a complete flush out? Because if we're just going to go to a 38% retracement, we're looking at a move coming down to the 4,800. 50% retracement, which would make sense, brings us down to 4,600. So, and then if we did a 62, then we're coming down to the 4,300. But this is, this would be, if it ever gave us a chance to get here, I think that we would, I think it would be a great buying opportunity. I'm not going to hold my breath on that, but I still think if we, the market pukes again tomorrow after this little relief rally today, and where you see the S&P down another 150, 200 points, which it can, I think you're going to see the Fed come out and cut rates just to really save the market. But in any case, let's just get down to the nuts and bolts here. So the bulls, they're going to have to get it above today's highs, which is the 53.07. If they do that, then I would anticipate that we're going to come up to right around that 53.64, and more likely up to the 53.63. So this is the resistance zone if the bulls win. Now, as I was showing you, this is like a line in the sand for the bears, for the bulls to defend, which is the 52.34, which is pretty much right where we're closed. And if that gets taken out, now we're coming back down to the 51.62 level. And from there, everyone's just going to be selling again. So it feeds off each other with this. And, like I said, I like the straddles just because you don't really care which way the market's going to go. It's going to go up or down. It just needs volatility. And I do believe volatility is, it's here right now. So these trades should keep working. I really didn't manage the one today that well. I mean, we got out of the call position, but I should have taken the put position off earlier since I knew the S&P was looking to rally today. But in any case, we're here. We'll wait for tomorrow for the open and take another trade. But with that, let's see what plays out tomorrow, and I will talk to you guys in the morning.